Hello, everyone, and welcome back. I'm Terry Johnson, a CPA with a virtual accounting practice focused on small businesses and individual taxpayers. And this is It Depends, where I attempt to answer those questions on small businesses and taxes that don't always have a very clear answer. Today, I'm going to try to tackle the no tax on tips. If you receive tips in your business, you may have already become frustrated in trying to file your tax return and figure out whether or not your tipped income is deductible and where to even put it on your tax return. So I'm going to clarify what tips are, which industries this applies to, and where to put it on your tax return and what the limitations are. The first thing to understand is whether or not this even applies to you. And Congress put some very explicit regulations in the tax code that determined which industries and which employees can deduct these tips at the end of the day. There is a very descriptive list that the IRS put out to try to make this more clear to everyone because there was a lot of questions in the very beginning. I will put a copy of that in the comments so you can download that and see exactly, number one, if you are eligible for this, and number two, if you're an employer. Going into 2026, there's going to be a 3-digit code that you have to put on W-2s to make it obvious to the IRS and the employee exactly how to handle this on tax returns. The first industry that is eligible for this is beverage and food service industries. So this is kind of obvious. This is your bartenders and your waitstaff, food servers in restaurants. This also includes any back of house individuals such as dishwashers or chefs or cooks. Tips are split with them. So everybody in the restaurant would be eligible for this tip deduction. The next one is entertainment and events. So this is individuals such as gambling dealers or gambling cage workers, as long as it's legal, dancers, musicians and singers, disc jockeys. So if you are in a legal entertainment arena, then you can deduct any tips that you're earning. Hospitality and guest services. This would be your baggage carriers, your concierge, your hotel and front desk clerks and maids and housekeepers. Home services, anyone coming into the home and doing repairs and maintenance. So if you're tipping your landscape guy or your pool repair person or anyone coming into your home and doing kind of home services, you're cleaning people, that would all be deductible. And then personal services. So this would be personal care and service workers, private event planners, photographers, videographers. If you're providing a personal service to individuals, again, as long as it's legal, then those tips would be deductible. And then personal appearance and wellness. This is your massage therapists, your hairdressers, manicurists, pedicurists, makeup artists. Any of those individuals receiving tips would also be eligible. And recreation and instruction. So this is golf caddies, self-enrichment teachers, recreation and tour pilots. So if you're on vacation and you're giving tips to your dive instructor or someone taking you on an excursion when you're on a cruise, all of those would be deductible. And lastly, transportation and delivery. So this is your Uber drivers, your Lyft drivers, shuttle people taking you to the airport. All of those would be deductible tips as well. One thing to keep in mind is that this applies to employees receiving a W-2 as well as self-employed individuals. So if you're receiving a 1099 from Uber or Lyft, you can deduct those tips. If you're a self-employed hairdresser, make sure you're tracking your tips versus your sales within your POS system or on some kind of spreadsheet so you can keep track of those tips separately at the end of the year from your net income and deduct those tips. Just make sure you're keeping very good records in case you ever do get audited. You don't want the IRS to have any reason to say those weren't tips. They were actually income that should be subject to federal wages. And this also is subject to all taxes other than federal. So it will go in your W-2 or on your self-employment income calculation, and it is still subject to Social Security and Medicare taxes, those are separate tax regulations from federal taxes, and that money goes to different things within the government and is spent differently. So any federal tax laws that come out typically only apply to the federal tax paid on your 1040. Most of them do not reduce your Social Security and Medicare taxable income. So you will see on your W-2, you will still be paying Social Security and Medicare tax on your tip income. You just won't be paying federal tax. And double check your state too. Some states have decided to follow federal law and won't be taxing the tips. Other states, for budgetary or other reasons, have decided that they're still going to tax this. So you might get a different taxable answer for federal than state on your wages. Unfortunately, when Congress wrote these regulations, not all tips are created equal. So things that you or your employer might consider tips on a daily basis may not have the same definition according to Congress. If a customer comes in and leaves you $20 on the table at the end of the meal or writes that in on the credit card slip, then that is very clearly a tip and you can deduct that on your tax return at the end of the year. The one nuance, especially within the restaurant industry, is fixed service fees. So if your employer, especially in restaurants, if they have a rule in there that parties of, say, 6 or more in a restaurant will get an automatic 18% added to the bill at the end of the day, Congress has declared that a service fee and not a tip because the customer didn't freely give it and it wasn't based on service. It was strictly based on the number of people in your party. So that is a service fee under these regulations, and that portion is not deductible. If the customer then leaves an additional amount on top of that fixed 18%, say, then the additional amount is deductible as a tip. And I have been in a restaurant myself. I was in one down in Florida last fall where it was only 2 of us having lunch. So it didn't even have anything to do with number of people in our party, but that particular restaurant just put a fixed 18% on every bill that came out. And I kind of felt bad because being a CPA, I knew that was considered a service fee according to the tax regulations. And all of the servers at that restaurant were going to be surprised at the end of the year when they found out that a good chunk of their tips are not deductible under these rules. So double check how your employer is handling this and what's going on the W-2 and how it's being coded when you're doing this. So employers, if you have these kind of situations in your establishment, make sure that they are tracked separately in the payroll system so they can be recorded correctly on the W-2 at the end of the year. And the amount going into box 12 is only the actual tips that the employee received, and it doesn't include any service charges. Another instance where service charges would come into play is situations such as Uber or DoorDash. Any tips given to you by customers when you deliver things or when you make runs for them are deductible, but if you're getting a cut of the service fees that go directly to Uber or Lyft or DoorDash, then those would not be deductible at the end of the year either. And then the other one is non-cash tips, which would be kind of more gifts if they're given to you from customers or clients. If they're giving you tickets to sporting events or gift baskets or jewelry or something like that, you may or may not be reporting that on the W-2 anyway. And the IRS certainly doesn't want anybody double dipping on deductions that were never reported to them as taxable income. So they've just drawn a line and said those are not deductible. And there are some excluded sources of income that you cannot deduct. The first one is illegal activities. I kind of highlighted that when I was going through some of the gambling and some of the other things. If it's an industry that is run legally, then those tips would be deductible. If it's an illegal establishment or illegal business, you cannot deduct those tips. And pornography is specifically listed in there. If you're receiving tips from that industry, you cannot deduct those either. And then the last one is professional specified service trades. This is a trade such as accounting, engineering, law firms, medical practices. If you're providing a professional service to someone And you probably already know what this is because this was detailed under the qualified business income deduction rule. If you're in one of these industries, you probably already know that you fall under that umbrella because that rule's been in place for several years for a different tax deduction. If you fall within that and you happen to receive tips, unfortunately, those are not deductible either. For whatever reason, Congress is putting more limits on deductions in those industries. So this is just one more area to be aware of, that that deduction is not available to those businesses. And like all tax laws, there are limitations and there are phase outs. So once you hit so much in earnings or so much in income, you're going to start to lose this. The max that you can deduct on your tax return is $25,000. And this amount applies whether you are single or filing a joint return. So if you're a single individual, you get to take the full $25,000. If you're married filing joint, it's limited to $25,000 on the tax return. So unfortunately, if you have both spouses working in service industries and making tips, it's limited to $25,000 together. They can't each take $25,000 on the tax return to get up to $50,000. So it's limited to $25,000 per tax return, regardless of how many people are listed on the return. And then there are income phase outs as well. Congress meant this for lower income, although the income levels are somewhat generous before it fully phases out. If you're an individual, it starts to phase out at $150,000. So if your adjusted gross income on your return hits $150,000, you'll start to see that deduction start to decrease, and it fully goes away once you hit $400,000 in your adjusted gross income. After $400,000, if you're single, then you won't receive any of the deduction. For married filing joint, it starts to phase out at $300,000. So if you have $300,000 of income, you'll start to see it decrease, and then it fully disappears at $550,000 in income. Those are just some limits to keep in mind when you're doing your tax return and wondering why it wasn't quite the $25,000 or maybe didn't show up at all on your tax return at the end of the year. The fun part of all this is how to report this. So for 2025, because this happened so late in the year and it was all retroactive anyway, and the IRS knew that employers and employees wouldn't have very good records and the payroll systems weren't in place to track this, the IRS has just said that 2025 was a transition year and told everyone to do the very best they can in reporting this on their tax return. The bad side of that is it's going to create more work during tax season for employees and tax preparers to try to piece together all this and figure out how much in tax and to figure out how much in tips were received during the year. The good thing is that even though it didn't come into play until July 4th, all of your tips received all the way back to January 1 of 2025 are still deductible. Make sure you have all your records. Like I said, if you get audited, you want to make sure that you can prove to the IRS how you got to that number that's on your tax return so they don't try to reclassify this on you. But do the best you can, put it on your tax return. For 2026, payroll systems will have to track the tips separately in all the payroll so that it shows up in box 12 on the W-2s, and then box 14 will have a 3-digit code clarifying to the IRS and to tax preparers exactly which industry the employee worked in to determine whether or not the tips are deductible. The good thing is that the IRS, because it's a transition year, has said, we know everybody's doing the best we can. The IRS is doing the best they can. They didn't even update W-2s before the end of the year because they were so swamped with figuring all this out. If you do get it wrong, if your return is audited for some reason and the IRS thinks that you did the calculation wrong or included tips that shouldn't have been included, you will have to pay the back taxes. So they will recalculate it and you will still be on the hook for the taxes that you should have paid in the first place, but they will forgive any penalties that would have been associated with that underpayment. There probably will still be some interest due on that because the IRS very rarely forgives interest because they just see it as a loan from the government to you, and you would have paid the bank loan or credit card interest. So the IRS makes you pay them interest as well, and that's what's written into the tax code by Congress. But they should be very forgiving on any penalties associated with this. It should be automatic. If it's not, just make a phone call, send a letter, however you can get through to the IRS if this comes up, just ask for that to be abated, and that should be able to be done almost automatically. That is the no tax on tips in a nutshell. If you have any questions, put them down below in the comments. I will try to answer them the best I can. I cannot give specific tax advice unless you are a client, but I will try to answer general questions the best I can down below. Thank you for tuning in. And if you haven't already done so, please subscribe to the channel and turn on the notification so when I continue to upload more tax advice or just business startup conversations that you tune in, and I hope that I can help you build more profitable and smoother running businesses.